So we are back. There are a few secrets that you need to know. Remember, the market always speaks. You're going to hear me say that all throughout this academy. And it's quite simple to know where the market is going and how fast it is going to go there. Now, how do you know how fast it's going to go? Remember, we're normally looking at an impulse, a correction, and another impulse to take place in the market. Now, what you need to be able to look for to be able to determine whether a trade is worth taking is what the first impulse move is saying. Now we're going to apply this philosophy that we learned in range trading, and that is do not fall for the first move, wait for the second move to take place. Because in the first move, who remembers what the first move does in range trading? Who remembers what the first move does? Other than set the parameter. What does it do? What does the first move do? What information does the first move give that will allow you to be confident of the second move? It helps you with your analysis. That's correct. So something in the first move is going to help you identify whether the second move is worth taking. Now, let's test everybody's eyesight here. Let's test everybody's eyesight. Which one would you rather? Example number one that has three candles, or example number two that has one candle. Which one would you rather be in? Very good, Mr. Hammond. How far the next move will be? Which move would you rather be? The one that has three smaller candles, or you have one that has one large candle that has the same pip distance as the three candles? Of course, it's logical to pick number two. Now, what I'm going to say here is that when you're looking for the first move, in order to know whether the second move is worth taking, you need to break down the characteristics or the traits of the first move. And what are we looking for? If you find a first move or a first impulse that is demonstrating these candles, so we call it choppy, right? Where it's one candle divided by three and it's slowly getting towards its destination. And if you find that impulse to take place all the way up that forms this first move, then the second move is going to be full of candles that look like this. So if the first move looks like this, where it's just small, getting there, slow but sure, the second move are going to have candles that look a lot more like this. Faster, stronger, better. So let's put this down as a rule for you to know what to look out for in the market this week. We were able to cover range trading well. Many of you were able to get the nuggets in the range trading. Now we're covering trend trading. If the first move is having choppy candles, slow but sure, after the correction takes place, the next load of candles that take place are going to be much stronger and much faster. The first impulse or the first move that has choppiness, have that patience to wait for the correction, because the second move is going to be explosive. Drop a 222 if you understand this. And sometimes you don't notice these things happen. Sometimes you say, oh, whoa, the market just moved like so fast. What happened? If you're in the Rhombus course, you would know this lesson based on AB equals CD sequencing. Okay, this is why it sounds familiar. But in the beginners, we're giving a basic prelude to what they'll experience in the Rhombus course. So let's go back down to Euro USD and let's see examples of what's happening in the market. Where's a recent example? Okay, even this one. This one will do, right? Actually, no, let me find something that is stronger. Let me find something. I see a lot of AB equals CD sequencing, but I want to get a perfect trend example. Give me a second. When you're on the spot, it's quite hard. Okay, here we go. You can see the difference between this impulse and this impulse. Can everybody see the difference? Drop a Y or a yes if you can see the difference between the two impulses that I've just drawn or highlighted, sorry. Whatever happens with one will be opposite with the other. So you see in this case, it was all bullish candles and it got to its destination quite quick. Whereas this one, even after drawing a counter trend line, you can see the difference between impulse number one, impulse number two. And you'll be surprised to know that they are the same distance. But yet this one looks better because it's all blue candles. But this one looks choppy even though it got to its destination. So if it's slow in the beginning, it's fast in the end. If it's fast in the beginning, it will be slow in the end. Do we understand this? Drop a Y or a yes. That is secret number one. What is secret number two? Secret number two is, in order to be able to have an idea, it's not definite, but in order to have an idea of how far a trend is going to go, let me go back here so we can do everything properly. In order to know how far a trend is willing to go, you measure the previous impulse, because impulse A at times is equally proportionate to impulse B. I said at times. So there you go. You've seen that at the end of the correction, I've been able to do a new distance to be able to measure the potential of where the next impulse move is likely to go. Now, if you don't want to go the whole move, what you can do is you can get a place in your projection and you can divide that projection in half. So this is roughly half over here. And you can say that you might be a bit fearful and scared to be able to go to the very, very top, but you're more comfortable going halfway. And that is also fine. So what can you do? Do a counter trend line, first top, second top, run it across. There's your counter trend line. And you're saying that once this counter trend line is broken and preferably has a retest, I now have two targets in the market I want to reach. There is this target at the top, which I've measured from this previous impulse, and then there is halfway of that distance in case I am too scared to go the whole way. Type a Y or a yes if you understand this one. This is where geometry is very, very fascinating, because we have not used a single indicator, and you can see that the results really speak for themselves. So if we press play, we should be able to see a break of structure, a clean break of structure, and we should be able to see not just one touch of a target, but we should see the other touch of the target as well. Let's see if it gets to take profit. Take profit one is done. Let's see if it goes all the way to our second target. There you go. Boom. So now if you see the overall distance from here, where the counter trend was broken, all the way to the top, it might look simple, but it was a lot. What is it, about, is that 1,000 pips? There you go. 1,165 pips. Divide that in half is about, it's almost 600, right? Something this simple is there, and it's an option for trend traders. Now, with giving this small introduction of trends, who is a range trader here and who is a trend trader here? If you are range, type in range. If you are trend, type in trend. Do not type both. One of them will appeal to you more than the other. And they both have their pros and cons. Maybe because of the lesson at hand, everybody's just going to biasly pick trend. All right. I saw one person honest and say, you know what? Still after this, I'm a range trader. And I respect you for that. At least you will stick to what is good for you. And you stick to that all the way. In the journey of this academy, you need to identify as one or the other, not both. Because consistency pays bills, not flexing. When you're consistent at what you do, you reap the rewards of your consistency. Okay? So those are the two secrets for now that I'll give when it comes to trend trading. We are able to identify an impulse, correctly identify a high in the market, get a correction going, identify the low in the market. Now we've established counter trend trading that allows price and time to meet and cause an explosion. Okay, when that explosion takes place, you are able to now gauge how far the market is likely to go. And if you don't want to go that far, then go halfway of that projection and put your target there. Works either way. And remember, I said that the market does not always have to retest. This example here, there was no retest of the market. Okay, but it took place. So that is that when it comes to trading the trend. But there's one thing that we are missing out on and that is, how do you identify when the trend has now reversed? Type in a 111 if that is something you want to learn tonight.